The rand sitting at 684. It seems that the local currency is going from strength to strength. What is driving the rand at this point in time?
Eleni, hi. Very difficult to say why the rand is performing so well. We're seeing very good import demand, or we have seen in the last week. But the rand continuing to buck the trend as the dollar strengthened against the euro and against the pound, against other currencies. And the rand is just finding support. I struggle to see that this is bond market related, because the bond market's doing very little in the lethargic holiday trade. Equity markets are sort of treading water. Very difficult to see why the rand is doing as well as it's doing. One suspects that there may be an order being driven out there, but I think we're still stuck in the range for the meantime. 682, 692 for the holiday season.
David, you said some of the speculators saying that there could be some deal going on. You also mentioned that importers are taking some cash out of the country. What kind of money are we talking about here that is propping the rand to this extent?
Well, from an import perspective, we're seeing pretty good demand. In the last week or two, we've seen some substantial demand, and it would seem that this kind of flow to drive the rand to these levels would have to be in excess of $1 billion or $2 billion over the last few sessions. So very hard to see why it's doing so well, as I said, and one can only speculate that there's some kind of order in the system, and that's keeping the rand very resilient, and in fact doing very, very well against the likes of the euro, and on a trade-weighted basis, more than holding its own, in fact strengthening quite well.
You mentioned for the holiday season you've pegged the rand around 682, 692 range. Is that going to be the levels we'll see until the end of 2010?
Yeah, I think, Eleni, on the downside, 675 should hold, particularly in the environment where the market is rather nervous around global debt levels. It's noticeable today that the holiday lethargy has kind of set in, and trade flows are very, 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 very low today, and I think that will continue for the rest of the holiday period. So on the downside, we got a very, very strong level of 675, and on the top side, 695 remains intact. And I think we'll trade on a narrower basis than that as the holiday period continues.
US Treasury yields are still on the rise. Still no real news coming through for potential tax cuts, but the market is pricing in tax cuts, of course, which is going to be a negative for the long-term debt rating out of the US. What kind of impact is that going to have overall on the dollar? We're seeing a little bit of dollar strength against the euro today.
Well, there's two ways to look at this, Eleni. One of them, when one looks at the rising treasury yields in the US, one of the arguments is, well, there's confidence seeping back into the system. US growth is on track, and as a result, we should see longer-term interest rates rising, and that's what we've been seeing. My take is slightly different on that, however. I think there's serious concerns around global debt levels. I don't think many people want to be caught holding government bonds at this stage, certainly as budget deficits ratchet up. And I think it's more of a risk than what the market is pricing in, and I would be very surprised if we don't see some risk aversion on the back of these rising yields, simply because global debt levels are so high.
David, let's touch on Chinese inflation, 28-month high, 5.1% for the month of November. Analysts out of China say that it could have been a peak and we could see a little bit of softening going forward. What kind of impact is this going to have? Because it really is all about China tightening even further. We know that they have made various moves with certain banks to tighten reserve ratios.
Well, they're very, very concerned about the economy overheating and creating an uncontrollable inflationary environment, and they have been reacting. They've been raising reserve requirements in China for over the last few months, trying to tighten their grip on an explosion of debt there. And they're very cognizant. They don't want the economy to overheat and then hit a wall in the coming months. So they're trying to keep inflation under control, and it's really all about the wealth effect coming through in China as property prices are rising, and the population in general feeling a little bit more wealthy and going out perhaps and spending. And that's creating the inflationary pressure, and the Chinese authorities keeping a tight rein on that and trying to rein in inflation. I don't see it getting out of control. They seem to have a handle on it, and it's really now about what the Chinese do with their currency in the year 2011. Because that's arguably creating some of the imbalances that we've seen in the world over the last few years.
David, I mean, if we do see a strengthening of the renminbi going forward, is that going to have a significant impact on the inflation outlook in China? I mean, we spoke a little earlier, and you did mention that it is an export-based economy, so perhaps the impact wouldn't be as significant as what it would be, say, here in South Africa.
Yep. Well, I mean, I think it would, if they allow the yuan to strengthen, it would certainly curb inflation. And I guess the bigger question is what that does for other emerging market currencies across the world. Should the Chinese allow the yuan to strengthen? It should, from a theoretical macro perspective, be positive for currencies like the rand, because we fall into the same kind of economic basket as such. Obviously, not nearly as big as the Chinese economy, but we are a commodity-based and we are an emerging market. Yeah. And what China does with their currency and with their monetary regime will have certain implications for South Africa. So a strengthening yuan will certainly curb or help the inflationary impact in China, but will also have implications for currencies like the rand.
Dave, you mentioned some of the imbalances that we've seen on a global level from a trade perspective. Surplus is definitely being key on the agenda. And we saw China's surplus coming down to around $22 billion from around $28 billion. We're also looking at the trade gap in the US falling to $38.7 billion from a revised $44.6 billion in September. Does that mean we're starting to see a little bit more of a normalization coming through from a trade perspective? And obviously because we have seen some changes on the currency front with the dollar and the renminbi.
Well, I think certainly from a US perspective, they'd like to see a much stronger yuan, because it certainly gives the Chinese an advantage. Developed nations across the world are trying to export their way out of trouble, trying to bolster their trade account, and as a result, kind of get some of the fiscus imbalances back into kilter again. So they would certainly, the US would certainly like to see a much stronger yuan. And a much smaller sort of trade surplus coming through in China, and the accumulation of US debt slowing as well. So that's one of the reasons that the US wants a stronger yuan. From the rest of the developed nations' point of view, they're bearing much of the brunt of these imbalances, and certainly a stronger Chinese currency is in the interest of the globe at this stage. And I think the Chinese are aware of that. It's just how quickly and how much they allow the yuan to strengthen in the year that lies ahead.